Good morning. It's Tuesday, July 8th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So it's Shark Week on the Discovery and Nat Geo. So I got the 50th anniversary hat. And if you didn't know, they actually filmed Jaws 2 right by my house over here down in Navarre Beach, where they had the setup for Amityville and everything else. And it's really cool. They've got a lot of different props floating around here that you could still check out. So looking at the markets here overnight, you do have U.S. stock futures. They did rise after the initial concerns regarding the Trump administration's latest tariff announcements shifted to optimism about the possibility of further trade negotiations. It appears that investors are favoring the more wait and see type approach. So checking in on the data here, we do have the S&P 500 up about 4.5 as of this recording, sitting at 6280. You do have the NASDAQ up about 55 points here, sitting at 22,934. So bonds, 10-year treasuries, and also gold, they are retreating just a bit, with 10-year treasury yields advancing about 3 basis points up to 4.4%. And the dollar is slightly lower on the charts after gaining the most in 3 weeks. So if you look at the dollar index, you really want to connect on the daily chart and throw this up here. If you look at about the February highs, you go to just below the March highs, and then you start to look at April, May, June, and July, all those highs. You could connect a downward sloping line there, and you'll see that the dollar index has been in this bear market, down about 10, 11% since the start of the year. And what's interesting is the inverse correlation to the S&P 500, and that's why you really want to look at different correlations between different key commodities, different currencies, and things like that, because of the fact there's a 94% rolling 3-month inverse correlation to the S&P 500. Essentially, what I'm telling you is as the dollar index rolls over and goes down, it should propel the S&P 500 and stock indices higher. Also, if you look at the way 10-year treasury yields have played out, we are seeing a bit of a move up as foreign investors have shied away from buying U.S. treasuries, concerned about the fiscal spending, the geopolitics, the certain Trump administration's policies specifically on tariffs. If we could start to bring those people back in, we should start to see 10-year treasury yields also fall. And then we're also looking at the data going forward. As we had that great jobs report last Friday here, and going forward, we see lower expectations as far as job creations. Now you look at the S&P 500, and again, what some of the analysts and what some of the large financial institutions are expecting. Goldman Sachs, they did raise their 12-month price target on the S&P 500 by 11% to 6,900. And then JP Morgan strategists, they suggest that investors should look to reload hedges ahead of that August 1st tariff deadline, as U.S. equity indices are near those record highs. So my thesis corresponds with both of these, where we continue to support buying the dips in U.S. equities while maintaining longer-term put protection in the event of any kind of potential market shock, whether it come from tariffs, geopolitics, or anything else down the road. I always tell you guys that you want to have car insurance. You don't crash your car every day, but you've got it just in case. Now, it's not a specific recommendation to the public. If you'd like to talk more about specific recommendations here in the futures and commodity markets, shoot an email to info@Blue Line Futures or reach out to me directly. Now, looking at some other markets here, we did have for some economic data coming out, the NFIB, the small business optimism for June, it did edge slightly lower to 98.6. Not really a market mover here. We saw about a 2-point sell-off in the S&P 500. We will have the New York Fed's one-year inflation expectations come out at 10 a.m. Central Time, followed by consumer credit for May at 2 p.m. Central Time. Now, looking at the precious metals here and looking at like the gold market specifically. So gold prices are slightly under pressure. 33.33 got up to 33.55. That 65 to 70 is really a resistance point. 33.55, call that your pivot. We'll want to see the market get above that on the day in order to boost some of that optimism up. But again, if you look at the chart pack, you can see there's a downward sloping line and also an upward sloping longer term area that holds as support coming in right around 34.10. So if you really look, besides that washout and that rejection of a sell-off that we saw on June 30th, the market is continuing to consolidate sideways again. Sideways action is oftentimes healthy for the market because it's where the bulls and the bears, they tend to collide here. In the market, what happens is the energy in the market continues to bundle up and it'll consolidate, and then what will happen is you'll see an explosion in price action in one direction or the other, and we really want to pay attention to that. We hold an upward bias to the upside, but we always want to keep one foot out the door here in the case that we get some kind of significant breakdown. Now, those sell-offs have been met by significant buying, specifically by the Chinese government, the PBOC. They've been adding to their holdings for several straight months now, and I reported that data here yesterday on the channel. Looking at the silver market, continuing to consolidate within this bull flag pattern here, but also hugging the upward end of it. We do have a small double top that was in place, and call it the Sunday night overnight high, and then you go back to about June 18th, that high. You'll want to note those two as your key levels here of resistance. So about, call it 37.40 and a half to 43. Market gets above there. We could see a move up to 38. Not much of a move at that point, and it's really $40 where I believe that a gravitational pull will take place and bring the market up to that. That's why if you were to sit here next to me and you were to look at what some of the clients have on and what many of the clients have on, they'll have long futures on the 1,000-ounce contracts in conjunction with bigger on the 5,000-ounce contracts. They'll have options as well on the silver market in the event that we get some kind of explosive move above the $40 handle, 42, 45, and finally the $50 mark in order to get those prices moving higher. So they maintain longer dated call spreads on that for that, and then they'll continue to trade the chop between these highs and lows within that bull flag. You got copper futures pulling back just a touch here on yesterday with a big sell-off and a gap lower as some trade negotiations take place. However, that 494 level here, which is a critical level of support, which was old resistance, now new support, I don't know if we're going to end up getting down to there as that market continues to be supported right around this $5 mark. So we'll want to watch that and see if we can retest back up at about that 520 level, where many of you people had taken some of your contracts off near those highs, near those contract highs, as we identified it as previous resistance, and now that area is running back into resistance as well. Looking at some of the outside markets, you do have the agricultural markets just slightly lower. Really big washout here yesterday. We did see corn futures drop to a 9-month low before recovering some of their losses as the U.S. government and other governments and markets responded to the new tariff rates. Meanwhile, Indonesia, it's the world's second largest buyer of wheat, announced that they reached an agreement to purchase more from the U.S. ahead of the upcoming tariff deadline in an effort to finalize a trade deal. We have natural gas futures. They are bouncing a bit up here, just ever so slightly, but bouncing off of key levels of support as we do have midday weather models indicating hotter temperatures going out into that mid-July, with 320 to 330 being your support range here for the August contract and significant support for that particular contract. Now looking at the ETF flows, we do have exchange traded funds. They cut about 28,000 troy ounces of gold in their previous holdings at 28,000 troy ounces, bringing this year's net purchases to 764 million ounces, and the sales are equivalent to about $94.7 million at yesterday's spot prices. So the most important thing to watch here when it comes to the ETF flows is, are they continuing to flow in? Are there outflows going in? What's the market doing while this particular development is happening? What I'm watching mostly is gold up 9.2%. What's important is that it's holding this range here at right around that 10% level. And then finally, the silver market edging higher, up about 8% year to date. So the gold silver ratio dropping, and it should drop to about 89-1 here during today's session here, provided you get some kind of boost in these markets. Something else I'm looking at is on the aluminum chart, coming down to a critical level of support. That's a bit of a tricky contract. You got to know which specific month to go into, and they don't have small contracts on that. So you got to be a little bit more precise and use risk management on that. We do have crude oil futures bouncing just ever so slightly as well after giving up some of its gains here in the overnight session, but continue to move higher. And we'll want to watch that 68 to about 72 area, which would be a 50% retracement after the Iran situation, those highs, the washout, the 3-day washout, and then markets naturally bouncing back higher. So that's where you want to have your fib retracement on the chart. I'll update the chart pack here and send it out here shortly. And if you got any questions on futures option trading, shoot an email to info@bluelinefutures.com. And remember, futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.